Ladies and gentlemen, welcome to this week's State of the Market. As you all know, Marc Fattore, Jennifer Dolh, and of course this week we bring to you some questions that you guys have asked us in what is happening in this market that we're going through. Now, it is a very interesting market, I think, to say the least, and there's been quite a lot, let's say, since the COVID hangover has started to take place. So a lot of up and down movement, a lot of, I guess, we'll consider it volatility in a real estate sense. But guys, I'm going to leave it with Jennifer now, and she is going to blast some questions away.
We'll get straight into it today. So question number one, with a lot more people turning to SMSF with self-managed super fund, what are your thoughts on parking super into real estate investments? Again,
as always, guys, and I mentioned this time and time again, and I want to continue mentioning it, you send in fantastic questions. So in regards to SMSF, of course, we are not legally allowed to give any form of advice, especially financial advice, on these state of the market recordings, but we can certainly say that there are definitely a lot more people that are putting in their SMSF, or their super, I should say, into real estate. Now, whether that be they're getting better returns of what they were getting in super, I don't know. Of course, we don't understand that complexity in total here at JR, but what we do understand is that with putting that money into super, it is giving it a much tighter safeguard. Now, the reason why I say that is probably because we've seen a lot of volatility over the last couple of years now with superannuation. I'm not saying that it'll always be the case, but if we do look at what super funds invest a lot of their money into, or a portion of their money when they break it down for you and show you what they've invested, real estate assets are certainly a big part there. So we are seeing a lot more of it. I think people are just understanding that from a long-term perspective, we're not going to be using our super tomorrow. We're going to be using it in 10, 15, 20 years time, depending on how old we are, of course. That is probably why we are starting to see a lot more of it. And of course, it is something that it's set and forget. So we don't need to continue watching it. It is a retirement plan. So, how good of a way to kind of put that to the side and literally not even think about it for the next 20 odd years.
Yeah, exactly. Number two, do we see a bounce back on commercial office leases in major CBDs?
I think we are. I saw a very interesting article actually a couple of days ago, or even yesterday, talking about that over LinkedIn, the job applications that were put up online in the last month or so only had about 6% that were work from home or able to work remotely. So this is starting to give us a better understanding now that the market is starting to say we need people to come back to the office. We need people to obviously collaborate again. Yes, we can do a lot online. We can fit in a lot more meetings. I think we've seen that a lot on our end as well. But more importantly, what we are starting to see is that company culture has been lost, of course.
Yeah.
Now, it's not the end of the world, but of course, if we want people from a long-term employment perspective, we certainly need to see company culture, and that comes by having that, I guess, face-to-face, skin-on-skin contact within the office, things like that. So yes, we're certainly seeing more of that happening at the moment. It depends on what industry we're in as well, I think. But yeah, we're certainly seeing offices and employees start to push people back to the office very slowly, yeah.
You definitely need that balance in your life anyway.
Absolutely.
Okay, lastly, so you mentioned before that the market will bounce back with a reduction in interest rates. Do you still feel like the same result will happen when coming into the last 2 months of 2022?
Yes, I do. I certainly do. You may not see it now, but if you look at all these micro markets, you will see that not only some of them have held their value, but some have actually gone up incrementally as well. Okay. Now, it may or may not be reported. Again, we know the media loves to talk about boom or bust, and right now we're in a bust period, let's say. And of course, interest rates are creating that cost of living. We're really, stirring the pot, let's say, from a media perspective on what is going on and how bad real estate can be and so on. But I certainly do believe that once we start seeing that stagnation of interest rates sitting flatline for at least 2 or 3 months in a row, we're probably going to see a massive bounce back. Look, I'm not just saying it. There are multiple other people out there saying it, whether they're in real estate, finance, analysts, whether they're BDMs even, right? There's a lot of people that are studying the market, and they can see certain trends that are starting to happen now. And we are in a very fast-paced environment. So we know how well property did in the last 2 years, let's say, not just in Sydney, but even all across the country in Australia. We understand that it's capable of doing that again. Are we going to see more people being able to borrow $3 million, $4 million than what we've seen in the past? Maybe not, but it's also going to open up for more opportunity where maybe apartments might start lifting in value in that regard because, of course, affordability, things like that. So, short answer, yes, we will certainly see a bounce back when those interest rates come down.
Awesome. Thanks for answering those questions
Pleasure.
today. As always, guys, you're welcome to comment below whatever question you may have for us both, or just shoot us a DM on LinkedIn or any social media platform that you see this video on. But other than that, it's been your Tuesday State of the Market, and we'll see you guys next week. Enjoy.
See you guys.